Hi, I'm Richard Rackley with Weichert Realtors Advantage Plus, and I'm here today with Lori Pike, and we're going to talk about home mortgages. Hi, Lori.
Hi, how are you?
I'm great. Thank you for coming in today. So mortgages are so complicated to me, and I'm talking as a consumer, not as a realtor, okay? Because there's just a lot of moving parts. So let's say I'm wanting to buy a house for the first time, and I found a realtor, and he told me to give Lori a call. Well, what happens next? I call you.
Basically, what happens is after you call me, we kind of discuss like general things like, do you have a down payment? What area are you looking in? Do you have an idea of what you want your payment to be or not go over?
Or what you can afford.
What you can afford monthly. And do you have a price range? Because a lot of times I find out that people, they might want a $400,000 house, but they don't want their payment to be over $2,000. Well, you can't have both.
Right.
So I think that it's a good way to kind of start setting expectations with them.
We talk, you pull my credit score,
Mm-hmm.
and you look at my income.
Right.
And we do that over the phone, and you give me a letter saying that I'm pre-approved up to a certain amount.
Right.
Okay, so a pre-approval letter is what you take to your realtor and say, this is the price range I need to look in. Because then we know that you've talked to a lender and they've done some basic background information verification on you, that they're willing to go to the next step. So that pre-approval letter doesn't mean you get the loan, though.
There's two different kinds. There's a pre-qualified and then there's pre-approved. Pre-qualified is normally where we just look at credit and look at income and we say, okay, you're qualified based on this. But in order to delve a little bit deeper, we get income documents like bank statements. Sometimes we get your W-2s, your paycheck stubs to see how much you're making. And then that way we can give you a pre-approval letter.
Right.
There are things that every now and then that might pop up that might knock you out of that pre-approved status that we can't see originally. Mm-hmm. You might have a huge tax lien that obviously doesn't show on your credit anymore or any longer. So that might be something that could but when you get a pre-approval letter, most of the time you are good.
Okay.
And there's just a few exceptions.
So in the process, so you get the letter and then you find a house and you make the offer. Let's say the offer gets approved. And then what's your job?
Then what's my job is I get to send out these nice paperwork that you have to sign and acknowledge. Basically, they're called disclosures. So I go into the system and I say, okay, this is your interest rate. This is what it's going to cost you. And I send all these numbers to you. And one of the paperwork in there is your loan estimate. And it kind of shows you like what your payment's going to be. It estimates the taxes and the insurance. So you have a really good idea of what you're getting into. Though those numbers can change, they're not written in stone, but they're a very good estimate at that time. Mm-hmm. And then once they sign that, then I usually do an appraisal after your home inspection's done.
Right.
And then when we get that all back in and title work and all that, we're good to go.
So the appraisal is so that the lender can make sure the value of the house is correct.
Right.
And it also you're lending the correct amount.
Right. And it's also a good thing for the borrower because they know that the house is worth at least what they're paying for it.
Right.
Then they're not going to go into the house being upside down.
So if I don't know what kind of house I can afford, I just know I don't want to rent an apartment anymore. So you could help me figure out what I could afford.
Exactly. And that's kind of what payment do you feel comfortable with?
Okay.
And is that including your taxes, your insurance, all that combined in one? And a lot of times they'll say, yeah, that's what we are comfortable with. And that kind of gives us an idea of what range they need to be shopping in.
Okay. Because you don't want to be looking for a house that you just simply can't afford. That's a waste of your time.
And if you show them a house as a realtor, you show them this house that that you just think that it's perfect for them, but it's out of their budget, they're never going to be satisfied with anything else.
Right. Let's just talk about down payments, because I know there's different programs out there.
There are a lot of different programs. We have some programs that don't require a down payment, like
no down payment.
Right.
On some of the programs.
Yes.
Okay. That's
no, their down payment and closing costs are two separate things. But a lot of times people will have, $1,000 and they'll want to go in and buy a home. And if they want to do something like that, looking in a rural development area is a great place to start.
USDA loan?
Yes.
Okay. And so there's a map.
Yes.
So if a realtor wants to know if a house can be a USDA loan, they have to go to the map and look up the address itself, and it will say eligible or not.
Yes, and sometimes it's as far as across the street. I mean, it's crazy how they just cut it off. This is good, this isn't. So another 0% down is a VA loan. And most veterans know about this, but it's a wonderful loan. If you qualify for a VA loan, it's probably the best loan that you should definitely go that route.
Go VA if you can.
Definitely. But there are some other programs. FHA requires 3.5% down.
3.5%.
So that's not too awful much. And a lot of times you can hold on to some of your money. FHA also allows the seller to pay 6% of your, the loan amount in closing cost for you. So like if your closing costs are $10,000 on a $400,000 loan, the seller can pay all your closing costs. And then literally all it's costing you to get it in the house is 3.5%. Conventional also has a wonderful program. It's for lower income. And when I say that, as long as they're 100% of the median income or below, and in Knox County, let's just say around 80,000 or below for their household, they can qualify for two different programs. One's with Freddie and one's with Fannie, Home Possible and Home Ready. They're great programs. It has discounted mortgage insurance. It's only 3% down. The seller can contribute 3% of the total loan amount in closing cost. So there's a good chance that you can get in with just 3% alone. So that's also a great program. If you make a lot of money, a lot of times you're going to either, and you don't have a 5% down payment, you're probably going to have to go FHA. FHA doesn't have income limits like that one program does.
Well, okay, you know what? This sounds really complicated.
It is. Sometimes it is.
And I'm in the business, and I'm still like, wait a minute. Okay, this is a lot.
Yeah.
So, okay, but that's just more to the point of why you
need to talk to
me.
You
need to talk to Lori, or you need to hire professionals, because this stuff gets real complicated real quick. Well, let's just talk a little bit about closing costs.
Okay.
What are they?
Oh, goodness. Closing costs, I know that a lot of times they'll say, oh, there's no closing costs. There are always closing costs, whether they be built into the loan, hidden from you, whatever, there are closing costs. Anything that you do costs money. We all know that. So basically what closing costs are is, let's say you qualified and it doesn't cost you anything for an interest rate of, say, 6%, but you wanted to get a lower interest rate. So you might pay points to buy the interest rate down. So normally you have maybe 1 point on your loan to buy your interest rate down. And then you might have some underwriting fees or credit report fees or fees that the lenders incurred in order to do the loan. Like some companies charge a fee to do a verification of employment. So all those fees would normally, be charged back to the buyer. So those would be closing costs. Our company has one flat fee and we don't charge anything else. So that's good for a borrower. They can put proper expectations on them as to how much it's going to cost. And if the loan takes longer and they have to pull another credit report, it doesn't get charged back to the borrower. So I think that's a plus also. But basically, so you have those costs, and those are going to be your lender costs. Then you're going to have title fees.
Well, we'll talk about the title closing costs with the title person.
Okay, cool.
But so that is the closing cost as it relates to the mortgage side of things.
Right.
And so what is like the different insurances that you have to get sometimes? Like mortgage insurance?
Okay, mortgage insurance would be, if you don't put 20% down, you're charged mortgage insurance. FHA loans always have FHA insurance, or they're mortgage insurance on it. But conventional loans, if you put 20% down, you don't have mortgage insurance. VA does not have mortgage insurance either, but all other loans do.
Okay. So it's insuring your mortgage.
Mm-hmm.
What does that mean?
Basically, it does nothing for the borrower. Mortgage
This is
insurance,
to protect the bank.
it protects the lender.
But is there anything particularly that I might not have brought up that you would like to talk about?
I really strongly suggest to talk to a mortgage person and ask them questions so that you understand what
How
you're
much does
getting
that
to.
cost?
It's free.
It's free.
Yeah.
Ask all the questions for free.
Ask all your questions for free.
So let's say I put money on a house. Let's say I'm trying to buy a house and then I get cold feet at the very end and don't sign. How much do I have to pay for all the things that you've done?
It depends on who you're working with. If you're doing a purchase, most of the time you're out your inspection fees.
Right.
Out your property
Appraisal.
inspection, your appraisal most of the time.
Okay. So there would be some fees
Yeah.
if someone backs out.
And if you back out just because you got cold feet, your earnest money deposit.
Yeah, you lose a lot besides just that. Yeah.
So,
All right. Well, anything else?
not that I can think of at the moment.
Okay, well, great. Well, Lori, thank you for coming out today and
Thank
spending some
you.
time with me. If you guys have any questions about buying or selling a house, please give me a call. My name is Richard Rackley with Wycott Realtors Advantage Plus, 865-326-3736. Thanks.
Okay, awesome.
That was pretty good.